Thanks for joining us today on The Close. I'm Marella Fernandez. Markets will close in a half hour's time. Let's get to the stories we're following in the BNN Bloomberg newsroom. Canadian inflation accelerated more than expected in December. Data from StatsCan shows the consumer price index rose to 2.4% compared to the year before, but that's because of a tax holiday we had at the end of 2024 that pushed yearly price comparisons higher. Broader food prices rose more than 6% from a year before, the most in 2023, while gasoline prices saw a decline year over year. The European Union considering imposing tariffs on 93 billion euros of American goods if Donald Trump follows through on that threat to hit European countries with a 10% markup next month. Coming from Bloomberg, the EU is also weighing additional countermeasures beyond tariffs. Leaders are set to hold a meeting this week. Brussels has also frozen approval of a U.S. trade deal as it prepares potential retaliation. The Bank of Canada says trade uncertainty is diminishing optimism among Canadian businesses. In its Business Outlook survey, the central bank says a growing number of firms expect to reduce their payrolls this year because of slowing demand and cost pressures. A third of businesses are also expected to see a decline in sales. Now, on the upside, the bank says more firms expect export sales to improve. IAMGOLD is one of the best performing stocks on the TSX today. The miner says its 2025 gold production is on track to beat expectations, driven by strong quarterly production at all of its operations. IAMGOLD also outlined fresh targets for the year ahead. Output of up to 820,000 ounces expected as operations at its site in Ontario is expected to be ahead of plans. Just checking in on the TSX right now. The U.S. market's closed for Martin Luther King Jr. holiday, and the TSX is 36 points up today, so we could be in for a new record close this Monday. Start to 2026, shaping up to be anything but quiet. Renewed geopolitical tension, more tariff threats, and questions about the new U.S. Fed chair. Let's go to Andrew Vuk. He's investment advisor at Wellington Altus Private Wealth, joining us now. Thanks for your time.
Thanks for having me, Marella, and Happy New Year.
Same to you. Weakness in the European markets with Washington threatening the new tariffs for Europe. What sectors are going to be affected by this?
Well, I mean, I think you look today, and autos certainly were the ones taken to the ringer in Europe, just given that's one of the number one imports kind of in the European Union that the U.S. consumer takes. I think we're looking a little bit more broadly at this, though, in terms of what other factors and facets we see here. Trying to connect the dots, we look at the whole block, the European Union. It's 500 million consumers, and given the fact that we're talking about these anti-coercion, instruments that they have use of, that could potentially, really hurt a lot of American companies. We were gathering some data from FactSet, and 42% of all S&P 500 companies draw their revenue from outside of the U.S. borders. Not surprisingly, tech takes 56% of all revenues from internationally. So, I mean, I think there's one aspect here where, European companies and manufacturers could get hurt, but, you got to look no further than U.S. companies and corporations as well have something to lose here.
Okay. Is this something you think that investors need to focus on, or is it noise that you think will pass?
I mean, the past year has been kind of a playbook to go by. It's noise, but it's constantly there, right? We say to investors, don't be a long-term investor one day at a time. I'm sure we're going to be talking about this for the better course of this week and next before we get some, juicy earnings from tech companies in a couple of weeks. But with that being said, it's still critically important, right? I don't think Trump's going to march into Greenland. It'll probably push to buy it, whatever that looks like. But this does have big ramifications, especially with the EU. They were planning on voting on that July deal that was struck with the U.S., and now that's on pause. So tariffs now coming back to the forefront, and people have recency bias. Look no further than Feb, March, and April of 2025. Markets took a pretty good licking with tariffs in the forefront.
Okay, so we are into earnings season right now. What's your take on what you've seen so far?
Well, so far we've been a little bit surprised just at how stretched things are. I mean, I think we're going to get a lot more reports coming out in the coming weeks. Like I said, tech is really going to dictate where the market goes. We're quite surprised when we look at earnings surprises. So I mean, below historical averages should be kind of high single digits. Companies that have reported so far have only had surprises in around 6%, and that's come down quite substantially. What worries us a little bit more is I think a lot of people, analysts, market participants are really hoping 2026 is the year of earnings growth or kind of earnings expansion to continue this run we've had. And when we're looking at PEs on the S&P 500 of 22, which are well above historical averages in the 18 to 20 range, it gives us pause. So we're looking to get a little bit more defensive, Morella, as we go through earnings season. We're going to be really interested. We've got 3M, Abbott, J&J, some big kind of durable consumer companies there, and healthcare. We're really liking these kinds of sectors, consumer staples, healthcare, to just shift client portfolios out of that tech overweight that we've benefited from the last couple of years.
Okay, so we've saw the rotation of money start sort of at the back end of last year, continuing to the start of 2026. You mentioned the sectors you like, and I know there are a couple of specific stocks along those lines. Global Health, the ETF, is one. Tell me about it.
Yeah, so we really like IJX, and as I said, I mean, you got the Eli Lilly's of the world and Novo and really benefiting from the weight loss drugs. UNH seems to be turning a corner. For a very long time, we've been really good asset allocators, and we've said to clients, listen, if you don't want to get kind of stuck picking a stock at a high, why not buy the broader healthcare sector? Healthcare has been a bottom quartile performer in the S&P 500 for the last 3 years. Everything mean reverts. So we do think, given everything going on with tariffs, people looking at really stretch valuations in financials and tech, that something like that ETF would be a great diversifier for many client portfolios.
Because we've seen an upturn, I mentioned at the start or at the end of last year, this one's at 98.87. You'd still put money in here?
Still would, right? I think what you're looking at here is, even with the uptick, everything you kind of have to take a relative lens on. So the performance was not there, 22 to 25 relative to the broader S&P 500, and we really think if you want to put a dollar somewhere where it's going to be a little bit more protected and not have as many of these potential headwinds that tech does, it's a great way to diversify.
Okay, let's get to another of your picks, Invesco Equal Weight S&P 500 ETF. Tell me about that one.
Yeah, absolutely. And we've been talking about this one on the show now for the better part of a year. Really interesting trend that we're seeing going on with the equal weight trade. It's really paying dividends, to use the punter analogy. For the last 3 months, Invesco, aside from Google, has outperformed not only the S&P 500, the equal weight Invesco that is, but also the other Mag 6 names. So as you're starting to see this rotation and people pressing pause on tech, and you're buying those other 493 names that represent an equal proportion of the U.S. market, you're getting a lot more diversity there. And back to my earlier comment just on earnings season here, we really hope we start to see some better market breadth from different sectors, and equal weight would definitely benefit from that. All
right, Andrew Vuchsler, got to leave it there. Thank you very much for joining us today. Appreciate it.
Thank you so much for having me.
The end of the federal government's tax holiday at the end of 24 meant we had increased inflation for last December. We'll take a look at that in a moment. The inflation rate hit 2.4% year over year in December. Let's dissect the numbers with Constantine Bomer. He's head of fixed income and portfolio manager at Mackenzie Investments. Thanks for joining us today.
Thanks for having me.
So the tax holiday of 2024, giving us this higher reading for December. Should we sort of ignore this number because of this one-off tax holiday? Are they meaningful?
Yeah, for sure. If we just look at the year-over-year number, those are heavily influenced by the tax holiday that we had last year. So that means that we're comparing against prices that were artificially lower last year. So we have to look a little bit through that. But I'm also sure that everyone that is a decision maker here is looking through those numbers. Probably the more interesting aspect will be just on the month-over-month figures to see if there's anything that we can take out of those numbers.
Okay, so let's look into those. Airline fares up by 35% month over month. So does that indicate that Canadians are traveling more or that prices were going up for other reasons?
Airline fares typically rise in December, so that is a typical feature that we would see during this time, and this is not a seasonally adjusted inflation figure. A lot of other countries actually produce their inflation numbers on a seasonal adjusted basis, so that would take care of exactly those outside moves that we've seen also this month here with airfares, as you said, up over 30%. My anecdotal evidence is that people probably went a little bit less on vacation. So if I just did a quick scan of my friends, but by and large, that was the biggest contributor and only marginally offset by the lower gasoline prices, which came down over 7%.
Okay. The cost of groceries also up by 5% sort of annually. And within specific categories, we're seeing some spikes. Why do we see groceries still continuing to trend higher?
I think that is just lingering on. We have the tariff situation, uncertainty around. I don't have a really good answer for why that keeps on rising higher and higher. I feel it too. Everyone is feeling the pain at the grocery shop. Prices seem to be going up still further. Yeah.
And core inflation metrics have been moderating. So what is contributing to that trend?
So we've seen now also for the first time in a very, very, very long time that mortgage interest costs have come down. So that is a meaningful contributor, or has been a meaningful contributor to overall inflation. And that metric has leveled off significantly. And we're now approaching maybe a level which is not contributing anything even to the year-over-year number, but on month-over-month, that was even a small decline. So that is providing a little bit of a relief on the inflation side. I don't think this was something that a lot of market participants were paying a lot of attention to as a signal of actual inflation, but that is a function of how the interest rate burden has come down with the interest rate cuts that we've seen by the Bank of Canada.
Okay. You also refer to the drop in gasoline prices. Do they typically go down in December? I know the summer season they tend to go up. Or was this because of the oil surplus on the market?
Yeah. Oil prices are down. If I look at WTI, which is a benchmark metric that is trading at around $60. So that has come down quite significantly. I see that you're pulling up a chart here. So oil prices overall have come down. Oil prices do not equal gasoline prices. There's a refining job in between, but those have also come down meaningfully. That is a meaningful decline, and oil prices overall seem to be fairly low, right around the level where maybe some of the producers are like at break-even costs. So that seems to be a threshold that is very hard to breach to the downside. So we shouldn't probably expect to see a lot more positive momentum coming from lower gasoline prices.
Okay. So, Constantine, you expect the Bank of Canada to start cutting rates again this year. Most are thinking that they might have a rate hike by the end of the year. What are you seeing that perhaps others are not?
Yeah, so, I mean, there's nothing in here in this report. Inflation looks pretty well behaved. I also don't expect that the Bank of Canada will cut rates at the next meeting, or also unlikely at the March meeting. So the next two seem to be fairly safe. But when we get into April and then into early summer, late summer, I think there's a significant chance or risk, however you see it, that the Bank of Canada will cut rates again. And the main reason for that is that economic growth still is weak. The housing market is in a very difficult situation. There doesn't seem to be any reason for renewed optimism coming back. That probably has to feed through multiple different layers of how that is impacting employment, how that is impacting consumption. And that is leading me to believe that economic data over the next few months and quarters will be weaker, and that will likely bring the Bank of Canada back into play. and bring lower rates for the market to reinvigorate or resuscitate the housing market to some extent.
All right. Constantine Boehmer, good to have you. Thank you for joining us on The Close.
Pleasure.
Greenland is ramping up military troops as tensions continue to rise with the U.S. How should Canada get involved? Should Canada get involved? We'll talk about that with Bob Ray in a moment. Denmark sending a clear message to Donald Trump. Greenland is not for sale. The European country has put more troops on the Arctic island, with Canadian troops in talks to join. Let's go to Bob Ray on this, former Canadian ambassador to the United Nations. Thanks for joining us today.
Thank you for having me. Nice to talk to you.
Should Canada send troops to Greenland?
Well, my personal opinion is, and I'm now free to give it, that I'm no longer working for the government, is I certainly think if Canada expects to have the support of the Europeans in our challenges that we're currently having with the United States, I think it would be wise for us to engage with the Europeans in Greenland. I think this kind of solidarity is going to be increasingly important as we deal with President Trump.
So this would be essentially a symbolic show, right? It would be a small contingent that gets sent. Should it be more strategic?
Well, I mean, it is strategic. I mean, the strategy we have to pivot to is a strategy where we understand that we cannot rely on the United States to be a rational partner because of how everything has unfolded. And I think that the notion somehow that Canada is going to just sit back and watch while what happens in Greenland that's not a smart strategy. Smartest thing for us to do is recognize the world has changed. The president has told us this. The ambassador of the United States has told us this. And so we have to take the steps that we need in order to advance the security interests of Canada in the broadest sense. And that certainly includes stronger relationship with NATO, stronger relationship with Europe. And that's got to be part of the picture of what we need to do.
I guess I'm asking, should it be more and should it be faster? Instead of sending, a dozen men and women from Canada, should we be sending a larger group? Should we start sending other things and putting other things in place in Greenland for military action?
Well, I think what we're going to need to do is concentrate on our own situation in our own Arctic when it comes to the kind of resources that you're talking about. But I think it's important for Canada to be at the table with the Europeans as they discuss, well, what are the security steps that can be taken? Canada can't separate itself from that conversation. We have to be part of that conversation. And what we end up doing in Greenland is going to be part of a bigger challenge that we face, which is to deal with the security of the Arctic overall and ensuring that we don't go down the road with President Trump, which is the road he's taking with Greenland. And I think we have to do everything we can to change the president's mind and the tenor of what he's saying, because if he's really interested in the security of Greenland, then he has to be interested in NATO. He has to be interested in advancing the interests of NATO. And he has to be interested in working with us as a partner and with other countries, Scandinavian countries, for example, that have a huge interest in the Arctic. He can't just wander through and say, we're going to take over this country and that country. He has to do it as part of a strategy with other countries.
What does this do to NATO? Isn't the strength of NATO already dissipating if you have Europe and the U.S. In a dispute and perhaps a confrontation over Greenland?
Well, whose fault is that? I mean, this is a manufactured crisis, manufactured by the President of the United States and his advisors. It has nothing to do with the real situation on the ground, and it has nothing to do with what are really the security interests of Greenland or of the Arctic more broadly. If the president were serious about addressing those issues, he would be talking to all of us about what we are all going to need to do to deal with the current situation with the Russians and with the Chinese and with others. and to have not only telling people what to do, but listening to what other people think we should do and understanding what other people are prepared to do. That's called a normal diplomatic military conversation among allies. What the president is doing has nothing to do with that. It has to do with shifting ground from one strategy to another, from one target to another, from one situation to another, from one press conference to another, from one tweet to another. It has nothing to do with what is normal in life. And so we have to respond to that situation as best we can. But when people talk about the crisis between Europe and the United States, between NATO and the United States, this is a crisis that's been created by the President of the United States. No one else. He's the only one who's creating this crisis. No one else is creating this crisis. Not even the Russians or the Chinese are creating the kind of crisis that he's responding to. And by the way, nobody's happier than the Russians and the Chinese at the steps that the president is taking, which make NATO's life much more difficult and pose an existential challenge, not only to Canada, but to, frankly, all the countries in the alliance who are now having to figure out what can we do to protect ourselves, not from the Russians and the Chinese, but what can we do to protect ourselves from the irrationality of this president? And that's the challenge that we face.
I do want to get your response to the texts that were shared that went between the leader of Norway and the American president, Donald Trump, saying he doesn't need to think purely about peace now since he didn't get the Peace Prize.
Well, I mean, this is like Saturday Night Live. This is not taking us to a rational place. I didn't get the Nobel Prize. I'm not writing any letters to the Prime Minister of Norway. The prize is given out by a committee. It has nothing to do with the government of Norway. Everyone knows that. And it has nothing to do with anything other than a decision that's made by the Nobel Prize Committee. Given the president's attitude to Canada and the threats that he's making about us, I think most Canadians would say he doesn't deserve the prize. But what we think is irrelevant. What is relevant is engaging in a rational way with the life of the world rather than fixating on whether or not you got a prize. I mean, this is behavior we expect in a kindergarten, and it's not something we expect in dealing with the President of the United States.
Yeah, I do have to leave it there, sir. I'm out of time. Bob Racer, thank you for joining us. Appreciate it. And the close continues after this short break. Here is the closing number on the TSX today, which gained 47 points to 33,087, which I believe is a new record high. Remember, the U.S. markets are down today. It is Martin Luther King Jr. Day, so it's a holiday. Let's take a look in Toronto at what moved on the day. Going to start here with the TSX again, up 50 points on this chart to 33,090 to end the day. Let's get to the movers. IM Gold is where we are going to start. Gold still on a run, so IM Gold moving up at 9.7% today. That company also reported earnings. We'll get more from Stephanie Hughes on that in a moment. Let's go to Silver Core. It is up over 5%, a gain of 82 cents to 16.56. And up 273% on the year. K92 Mining also a gainer 4.7%, $1.23 a share to 27.34. And then KR Core is down today, almost 4%, dropping $1.76 and taking it to 43.23. Go Easy dropping almost 4% as well, losing $5.26 a share and taking the share price to $129.03. Let's go to Bloomberg's equities reporter, Stephanie Hughes. She joins us now with more on this. Stephanie, gold and silver floating stocks up today.
Absolutely, Marella. Yeah, it's been another day where gold and silver have their shine on. And I want to tackle the story looking at IM Gold. And those shares gained by nearly 10% at their highest point, which was its biggest intraday jump since November, and it was enough to bring the stock price to a new all-time high. Like I mentioned, it was because gold and silver prices are rallying. It jumped to record highs, in fact, after President Donald Trump intensified his push to take over Greenland with tariff threats, which fueled fears of a trade war between the U.S. and Europe. So spot gold prices climbed by over 2%, nearing that $4,700 an ounce mark, and silver prices gained by over 4% earlier today. So Trump said that the U.S. would slap tariffs on 8 European countries, including France, Germany, and the U.K., because of their opposition to Trump's desire to take over Greenland, or to acquire Greenland. So it's another day with another news cycle that's fueling another flight to safe haven assets like gold and silver. And that's exactly why you're seeing names like TSX listed miners like IM Gold on the rise. You mentioned Silvercore. There's other names like Lundin, Wesdome Gold, and quite a few others, Morella.
Okay, let's get to Go Easy, which was dropping today. What happened there?
That's right. Yeah. So it was a rougher day for Go Easy. Those shares fell by nearly 5% at their lowest point, which brought the stock price to a month low. And that's because TD Cowen downgraded the alternative lender to a hold rating from a buy rating, as just arguing that the average analyst earnings estimate for the company was just too high at these levels. So the analyst Graham Riding and his team said that the runoff, of higher yielding loans and credit write-off rates, or the rate of loans where consumers just can't really pay it back and it's written off the balance sheet, those could actually weigh on consumer yields and earnings. So a muted earnings growth profile will definitely weigh on the valuation, argued TD Cowen. So that's exactly why they also cut the price target down to $135 from their original $160. The Go Easy had been selling off over the past couple of months for a variety of different reasons. One of them was a short seller report. Another one was the CEO unexpectedly stepping down because of a health issue. And then the last earnings report, or one of their earnings reports, had them missing estimates just because they had higher provisions for credit losses. So over the past year, last time I checked, those shares were down by nearly 25%. So they've been selling off here and there at the back half of the year last year, and now starting the year with a few more legs downward, including today, Morella.
Okay, Stephanie Hughes, thank you for the update. Appreciate that. Coming up next, some say Canada is not attractive for foreign capital right now. Why? When we come back. Our next guest says Canada's relevance on the global stage is shrinking and no longer attractive for foreign capital. Let's go to Martin Pelletier, Senior Portfolio Manager, Trivest Wealth Counsel with Wellington Altus Private Counsel. Thanks for joining us today.
You betcha. Thanks for having me.
So you believe Canada is getting less relevant on the world stage. Why is that?
Well, I think it's because of the policies that we've seen over the last decade in regards to putting up barriers to attract capital. We're not viewed as a regime where there's a stability, scale, or opportunity. The regulatory environment is quite excessive. And as a result, foreign direct capital and foreign direct investment has been leaving the country, not coming in. And what we're seeing out of the new government or new leader of the existing government is nothing that's really going to move the needle, in my opinion. MOUs are simply, talking about the things that they want to do. But this is a time that we need more action than consultation and talk.
Is part of the question for Canada surrounding CUSMA and whether or not it's going to be renewed?
Yeah, that's going to be a major issue, in my opinion. I look at Trump's response to Canada and them negotiating with China that, hey, do Canada, go ahead. I think that in itself shows that we're in a point of weakness, not strength, and Trump shrugged it off. CUSMA, in my opinion, is likely going to face some tough renegotiating before June, and most likely replaced by a bilateral agreement that will not be favorable for the country. And that's something that we should be cognizant of. especially if we happen to get an election before such time here in Canada.
Okay, so how are you advising investors on bonds at this point?
Well, I would look at what the government of Canada is doing and do the opposite. So we don't want to react to things. We don't want to say react to, poor me, poor us, what's happening to us, or blame them. Although we do have a situation where there's been some policies and a lot of policies hostile towards Canada from the U.S. But we could say, let's take a step back and respond logically. And looking at Canada itself, we don't have any gold reserves. We're the only country in the OECD that doesn't. But we do have mining companies. And so maybe you want to own a little bit of gold itself as an investor. Maybe you want to own some US dollars. Maybe you want to own some gold or precious metals producers per se in your portfolio and take a different approach to what our country is doing nationally.
Let me take a step back because we talked about CUSMA and you don't think it will go very easily. I don't think anybody does. But you also say that China is not an answer. Why is that?
Well, okay. Looking at a long-term partner, long-term relationship, they tend to do deals with countries that are in a stressed or disadvantaged position. We are in a stressed and disadvantaged position. So we're reacting by going to China in itself. We're negotiating from a point of weakness. I would rather see the government take a slow approach, a slow and steady approach, and slow play the U.S. government. I personally think we're going to see a change in U.S. midterms. That could be very favorable to Canada. So time is an asset, not a liability. I don't think we want to respond by antagonizing someone south of the border that could be quite responsive or unpredictable, or probably is a better choice of words.
Okay, let's get to how you are moving money around. What are you advising investors? Precious metals, still on a run. Gold gaining record after record. Silver as well. Are you adding more to precious metals?
Well, we had a good position in silver. Didn't anticipate the kind of run that we've seen. It's surpassed our level of comfort with volatility. And so we've taken profit on it. Probably looking based on the activity today, maybe too soon. I don't know. We rotated and increased our position in gold. We've done so through some ETFs like the GLD, iShares Gold ETF. And we think gold is a good long-term way to protect your portfolios against debasement. And there still is deflationary risk on stocks. We're seeing or higher beta plays like Bitcoin, whereas gold and silver are providing a nice hedge as governments are having to print money to buy their debt. And that should continue to see that debasement. If you look at the purchasing power of our currencies, both in Canada and the US, we're at 74 cents on the dollar from 2019. And that's not good if you're sitting in cash.
Okay, so we talked about gold, and you liked Agnico Eagle in the gold space, and then you also have a suggestion for copper.
Yeah, so we have Steve Rolls. He's been on your show, partner of ours, and he covers these stocks and has done a good job. Agnico is we like it because of its low-cost, geopolitically safe jurisdictions it operates in: Canada, Australia, Finland, and Mexico. It's got long life reserves, strong cash flow, and disciplined management. So it's a good anchor point for us in the producer space. When I was an energy analyst, we always looked at owning the commodity or the producers and which is the cheaper way of doing so. And we think that companies like Agnico are not reflecting the current price environment, and eventually they can continue once that investors get confidence in that. They'll start moving more into some of these names like Agnico, and that'll be a good way to play it. BHP on the copper side, it's a global copper producer, and it's got some really good discipline. We think copper is structurally undersupplied with a long cycle demand from electrification and grid expansion, and copper isn't playing the same kind of upside volatility that we're seeing in other commodities like in gold, for example. So we want to own a little bit of that in our portfolios.
Okay, Martin, I got to leave it there. I'm out of time, but thank you for your time. Good to see you.
I bet you. Take care.
And coming up next, Trump, of course, reigniting a trade war now with his European allies because he wants Greenland and he wants them to agree to that. We'll talk about it in a moment. The U.S. president is threatening tariffs on some European countries as he escalates his bid to acquire Greenland. Let's go to Sean King on this. He's Senior Vice President at Park Strategies. Sean, do you see the tariff strategy working in any way to get Denmark to surrender control of Greenland?
Absolutely not. This is only going to get coalesce European support around Denmark even more. It's so counterproductive. If Greenland is important as Trump says it is, nobody's going to make such a strategic decision over 10% tariffs, which U.S. importers pay anyway. And I don't see how these tariffs would not be a breach of the trade deal that Trump struck with Ursula von der Leyen in the EU last year, because products from EU countries have a uniform tariff rate with external partners. So how would you put an extra 10% on Absolute vodka from Sweden or butter cookies from Denmark? So it's ridiculous. And no, it's just going to steal Danish resolve even more.
Does the U.S. need Greenland or just need a greater presence in Greenland?
I say this as an American, a security conscious American who's also lived in Scandinavia. We do not need Greenland. In many ways, we already have it. First of all, Denmark is a founding member of NATO, and we have a separate parallel treaty with Denmark in 1951 that basically gives us basing rights on Greenland. At the height of the Cold War, we had 50 installations on Greenland with 10,000 U.S. personnel. At the end of the Cold War, we still had 12 bases. Today, we only have one, but that's only because we chose to close those bases. And an amendment to the treaty in 2004, which acknowledges Danish control of Greenland, basically gives us the right to build more bases without even having to get approval from Greenland or Denmark. So we could have the milk without buying the cow. We could have the run of the place, do what we want, but let Denmark carry the cost of it. I mean, do we really want to be subsidizing Scandinavia-style healthcare for the population of Greenland and having to monitor this when we can have our way there anyway? It's absolutely ridiculous. It would also mean the end of NATO. So we would be the only ones protecting Greenland instead of all 32 members of the NATO alliance. It's very counterproductive and is really a disservice both to the alliance and U.S. interests.
Okay, could this be a play to what you had just mentioned, where the U.S. doesn't run Greenland but gets to do whatever it wants to do and get deals for what it wants from Greenland?
I mean, no offense to you or your network, but that makes no sense because that's already the case. You know, Denmark has been asking us for years to come back and put more forces there. They've been begging us to drill there and mine there for whatever we want. None of this, we already have that situation. All this is going to do is alienate the people even more. And, you know, one charitable view of this is that Trump feels or fears that one day Greenland will declare independence from Denmark and then affiliate itself with Moscow or Beijing. So we want to occupy it in the meantime. So we're going to forcefully occupy Greenland. Then we have a restive population, a Greenlandic insurgency against U.S. occupation. How does that make us better than China and Tibet or the South China Sea today? There's really no need to do any of this because we already have that. Greenland is ours for the strategic taking if we want it, and just let Denmark continue owning it.
What does this do to NATO? And you alluded to this, but give me an idea of what this does to NATO. So we're starting out with terrorists and then counter-terrorists, but we're seeing some military presence beefed up in the area. So what does this do to NATO?
Depending on what more happens, it could, and I'm not trying to be hyperbolic here, it could really mean the end of the alliance. The only time that NATO's collective security charter has been invoked was on 9/11. And this would be the first attack otherwise on a NATO member by another NATO member itself, if we go in militarily. But even if we coerce Denmark into surrendering it, that means the U.S. cannot be trusted as an ally. Because again, it's not just the NATO treaty, but we also have this separate standalone treaty with Denmark that was amended in 2004. So it shows we can't be trusted. Also, except for Canada, and I'm not just saying that to suck up to the audience, you really can't ask for a better ally. Denmark resisted Nazi Germany. Unlike neighboring Sweden, it joined NATO in 1949. and it was with us not only in Afghanistan, but also Iraq. After the US, Denmark suffered the most casualties per capita in Afghanistan of any other country. And this is how we treat our best friends. I do think that if we continue down this path, it would mean the end of NATO.
Do you see this escalating to more of a military standoff and then perhaps stalling there?
2 weeks ago, I would have said no, but after Venezuela, anything's possible. I still consider it very unlikely, but if I were at Vegas right now, and I will be in March for a Knights game against the Blackhawks, if I had to say, I'd say there's a 20% chance we do something. We send some kind of troops or force in that's unwelcome.
Are you surprised
that would be an outrage?
Are you surprised that hasn't already happened? Because we've heard, as you heard.
No, I'm not surprised it hasn't already happened because, we're still digesting what happened in Venezuela. And it's really this Greenland talk has only started the last 2 or 3 weeks. I was in Copenhagen the week after the election in 2024, and it was still just a joke around the dinner table. It's only the last few weeks and then we thought everybody forgot about it. But now it's picked up speed. I'm not surprised that, it's only been a few weeks. Maybe Trump thinks he can bluster them into giving it away. So I'm not surprised we haven't tried anything yet. But I put it at like a 20% chance that we do something.
What is the sentiment like, Sean, among Americans to the idea of a conflict with or in Greenland?
I think most people haven't considered it seriously because it just seems so farcical. And I think people have a trouble understanding where Greenland is and what it is. Most people just fly over it on their way back from Europe. And some people will defend Trump no matter what, and they just think it's liberal histrionics. But for those who think it through, they think it could be a disaster. And I'm happy that a lot of conservative intellectuals like Rich Lowry and Douglas Murray and others have penned very persuasive op-eds to try to convince Trump. This is not just a Democrat thing. A lot of sensible Republicans, and we saw some Republican members of Congress go to Denmark and Greenland last week and carry this message as well. So not that many people are thinking about it because not everyone takes Trump seriously. But for those who do and who know the issues, they're very alarmed.
Sean King, God leave there. Always good to have you, sir. Thank you.
Thank you.
And coming up, we'll take a look at some of the reasons why the TSX is getting smaller, why there are more than 30% fewer companies than there were 10 years ago. Back in a moment. Here are the stories we are following in the newsroom today. Canadian inflation accelerated more than expected in December. Data from StatsCan shows the consumer price index rose to 2.4% compared to the year before, mostly because of a tax holiday at the end of 2024 that pushed yearly price comparisons higher. Broader food prices rose more than 6% from a year earlier, the most since 2023, while gas prices saw a decline year over year. Gold and silver rallied today as the U.S. president has a push now to take over Greenland, and it fueled fears of a trade war between the U.S. and Europe. Trump has said the U.S. will impose tariffs on European nations that oppose his plan to acquire Greenland. European leaders are discussing options for how to respond, including retaliatory levies on American goods. The Bank of Canada says trade uncertainty is diminishing optimism for Canadian businesses. In its Business Outlook survey, the central bank says a growing number of firms expect to reduce their payrolls this year as a result of slowing demand and cost pressures. A third of businesses are also expecting to see a decline in sales. On the upside, the bank says more firms expect export sales to improve. Mullen Group is targeting up to $2.4 billion in revenue this year, driven by new acquisitions, improving freight demand, and infrastructure spending. The Canadian trucking and logistics firm says it is able to fund long-term growth and will focus on robotics to improve warehouse and data management tools. Two persuasive themes in Canadian financial markets have been the momentum in private capital and its impact on public markets. For more, we were joined by Neil Self, founding principal at Infor Financial Group.
Well, it's good to put Canada in the global context. In 2025, we actually saw a pretty decent rebound in global M&A. Deal volume globally was about 4.8 trillion, which was up about 30%. But when you look below that number, it's really quite nuanced. Deal counts were much more uneven, pretty well flat year over year. So the market's been defined by fewer deals, but larger, higher conviction deals, typically where there's strategic rationale and financing was available to execute those transactions. The dominant driver has been corporate transformation, as we saw with the big tech Anglo deal here in Canada. Canada itself, though, outside of the banks and some of the larger specialty companies, is really full of mid-market companies, and those mid-market companies have been picked off. I think many of them are undervalued, have been overlooked, and what we've seen is that, as you mentioned, a whole host of Canadian companies over the last 10 years, but particularly over the last year, going private. We, as a firm, Infor Financial, advised on 6 go privates on the TSX, including Mubadala's acquisition of CI and Dental Corp's acquisition of GTCR this year. And we expect that pace to continue into 2026.
Yeah, so CI going private, that was the biggest deal you did, I think. And it seems a bit depressing almost that Canadian companies just can't attract valuations, can't attract investors in many cases.
Yeah, I think depressing is one word to describe it. Certainly, we are not, as a nation, replacing companies that are going private with new IPOs. It's not solely a Canada issue. Private capital has grown by leaps and bounds over the last few years and represents a real viable alternative to public markets today. And we're seeing private capital providers, both equity and debt, not only focusing on Canadian acquisition opportunities, but focusing on global acquisition opportunities. We expect that to continue. Sponsor-backed activity is likely to pick up as they are under increasing pressure to deploy that capital, which means that companies will function more in the private. We'll see more companies functioning in the private market as opposed to the public market probably going forward.
And Jamie Dimon of JP Morgan has expressed concern over the drop in U.S. listed companies. Apparently, he said in 2023, the number of U.S. public companies had dropped from 7,300 in 1996 to just 4,300 more recently. And he says, in some ways, this is a loss of transparency because these companies have to report under rigid rules how they're doing.
Yeah, I think it's a good point, but candidly, I think too much is made of the regulatory complexity of being a public company. Perhaps governments around the world will lighten up on that, and that would be welcome. But I think the real driver is we're seeing private equity funds and private debt providers just have much more resources to go after public companies. And if you're a public company, it can grow just as well with a private company, private equity backer. Why would you stay public? You've got greater regulatory burden, greater reporting burden. You've got a whole host of shareholders who have opinions on how you run your business. And so I think the driving force globally is the growth in private capital. But there's no doubt that Canada is feeling the impact of go private transactions probably as much as any exchange in the world. And that's a result in large part of not replacing our IPO candidates either in the extraction industries, metals, or oil and gas. And even with AI, while we have a few national champions in AI, we just don't have as many up-and-coming tech and AI-related companies as you would find in the United States and perhaps elsewhere.
A couple, now I know these are not equity funds generally, but we have seen a couple of real estate and private bond funds halting redemptions in Canada.
Yes, I mean, certainly one of the issues that you have with funds that buy long-term assets and it doesn't really matter where they're located, but have short-term redemptions is a mismatch. And certainly the Canadian real estate market has been very hard hit over the last couple of years, and real estate is extremely hard to sell in the Canadian market at what managers believe are fair prices. Mm-hmm. And so they have many Canadian real estate funds have halted redemptions to try to preserve long-term value.
Neil Self, founding principal at Infor Financial Group. Coming up next, White House economic advisor Kevin Hassett has said the U.S. president may keep him in the job he has, meaning he will not be the next Federal Reserve chair, a role the market had long anticipated for him. We're back in a moment. The market responded negatively to the news that the U.S. president could keep Kevin Hassett in his current role, removing him then from consideration for the next Federal Reserve chair. Let's go to Thomas Honig on this, former chief executive of the Federal Reserve Bank of Kansas City. Thanks for joining us today.
I'm glad to be with you, Marilla. Thank you for having me.
What's your take on Hassett likely being out of the running?
Well, given all the events that has taken place in the last week, it's not necessarily a surprise. The president, Trump, moves back and forth as he goes through this process. And, when Hassett was the lead, I wasn't so sure because he does change his mind, and it looks like he changed his mind towards Hassett this time. I now understand that perhaps Kevin Warsh is in the lead, but no one knows. It's all speculation at this stage.
How has the probe into Jerome Powell, the current chair, change things, do you think?
Well, I don't know for sure, but it looks like what it's done is create a great deal of skepticism around the selection of Hassett. Right after that, there was a lot of discussion about it, whether, given his closeness in terms of his current role with the Trump administration, that he would give the markets any confidence of independence. And therefore, that's caused perhaps people inside the administration, perhaps Trump himself, to say, well, maybe I better, think about someone else. And Hassett is a good advisor to me in the Economic Council. So he's kind of gone down that path. I don't know that there's more explanation to it than that, but certainly some of the turmoil over the last week has had some impact on that, I'm sure.
Do you believe Powell will stay on as part of the committee even once he's done his term as chair in May?
Well, that's a hard one to read, too. I know that, given the amount of pressure on Powell and the amount of time he spent in that job, I would think he would be interested in stepping away. But given the circumstances and the fact that there is this most recent kind of challenge to the FOMC, he might temporarily stay on in terms of transition to kind of convince in his own mind whoever is selected as chairman will be able to act or be willing to act independently of the immediate oversight of the president. So those are factors that will come into his decision, I'm sure, but how he will come out, I doubt anyone knows, but maybe Powell and his wife only.
Do you think that you touched on the fact that perhaps they're looking at somebody who would be further away from the president, seeing it more as independent? And who do you think leads in that light?
Well, I think that's part of it. Perception matters, I suppose. And this will give it more of a perception of, they thought he would be the person. I'm choosing someone else. Hassett said he agrees with that. So this would shift the speculation towards the other three and maybe someone that no one knows about. The other three candidates, and perhaps someone that we don't even know about. So that's how you have to kind of look at this in the transition stage.
Do you think the focus for the Federal Reserve is still on the labor market and weakness seen there? And I'm asking because, of course, now we have the new threat of tariffs on European products that are coming into the U.S.
Yeah. I think for this FOMC, given what I'll call the three Republican-related nominees and Powell himself, I think employment is the issue that they will be focused or have been focused on and will continue to be focused on. And if you look at it objectively, the price index has been near 3% for a year. That does not seem to be the priority given their most recent cut. And therefore, I think employment is a very important topic. Having said that, I am of the opinion that given how strong the economy in the United States for the moment appears to be, that this next meeting they have will be one in which they will kind of wait and see, that they'll not move this time. But you never know. I mean, it is an FOMC. They are focused on unemployment, and they seem to have de-emphasized inflation. So anything can happen. But I think at the moment, they would want to wait and see and not move at this meeting.
How would you characterize affordability right now in the U.S.? It's definitely an issue for Canadians, and I'm just wondering if it's as big of an issue for Americans right now.
Well, it is an issue in the United States. It's being made an issue. Things, goods in the United States, services in the United States are much more expensive than they were, 3 or 4 years ago. They have also increased in the last year with the inflation that we've had, and also some asset inflation. So it has been made a political issue, and I think that has entered the picture for the president. He's talked about putting caps on credit card debt. He's talked about moving funds from Fannie and Freddie, our what I call our housing agencies in a sense, and moving funds to help fund loans, home loans. So yeah, affordability is the issue, and it's becoming very political, and decisions are being made around that topic. And
you think it'll be more of an issue as the year goes on, as we get to the midterms?
I suspect it will be. I think the Democrats will make it an issue if they can, and given the cost of housing in the United States and cost of goods, I think they will have data that they will use to make it an issue, regardless of the president's efforts.
Thomas Hoenig, I got to leave it there, sir. Thank you very much for joining us on The Close today. Appreciate it.
Glad to be with you. Thanks for having me.
With Qatar in the rearview mirror, the Prime Minister is now in Davos, Switzerland, attending the World Economic Forum. Although this year's theme is a spirit of dialogue, tariffs and geopolitical tensions are expected to define the summit. Let's go to CTV's Rachel Aiello.
Good afternoon. So Prime Minister Mark Carney's main objective as he was preparing for and heading to Switzerland to attend the World Economic Forum was trade diversification, selling Canada to the world, other world leaders, as well as the wealthy investors who are set to be there for the World Economic Forum. Though, as has been the case over a number of recent global confabs, U.S. President Donald Trump and his threats about tariffs are looming large and are set to largely overtake the conversation happening there in Davos. Prime Minister Mark Carney is supposed to deliver a special address to the WEF on Tuesday, focused in on cooperation amid an increasingly complex world. And that is obviously a topic now that has increased weight given what we're seeing with Donald Trump. Trump has now threatened 8 European countries with a 10% tariff as of February 1st, raising to 25% by June if they continue to oppose his push to buy or annex Greenland. Now, we're waiting to see where the federal government and where Canada falls in terms of next steps. We've heard the Prime Minister say he is concerned about the escalation of this situation. We've also been able to confirm that, according to a senior government source, Canadian officials are considering sending a small number of troops to Greenland, a move some of those other European nations have taken. The factor, and what we'll be watching to see how the federal government weighs this, is it to our best interest to take that step, send some soldiers, look like we are, at least symbolically, standing shoulder to shoulder with our European allies and risk riling up Trump? Or do we take the approach of keeping in mind the risk a higher tariff on Canada would have to the domestic economy and not take that step at this time? So watching to see if Trump and Carney meet on the sidelines, if all NATO countries get together and have a conversation about Trump's ratcheting up of this rhetoric, and where the federal government will land on this question of soldiers heading to Greenland. All very live issues, very high stakes next couple days for the Prime Minister in Switzerland.
CTV's Rachel Aiello reporting there. Coming up next, the IMF has raised its outlook for global growth this year, but will escalating trade tensions threaten the momentum? More in a moment. Global leaders gathering in Davos, Switzerland for the World Economic Forum's annual meeting. Among them is Kristalina Georgieva, managing director of the International Monetary Fund. Our Bloomberg colleague spoke with her about the global economic outlook as trade tensions continue to rise.
Well, let's start with the good news that the world economy has proven to be remarkably resilient. We are projecting 3.3% growth for this year. We expect 3.2 next year. And when we look at the sources of this resilience, four things stand up. One, trade tensions have not been as dramatic as we feared. Yeah. Two, private sector, incredibly agile. Yeah. Three, and we don't talk enough about it, good policies. The fact that governments have developed tools to act responsibly. For AI and the promise it holds. So your question is correct. Would this resilience hold? Too early to say what exactly the impacts of new trade tensions is, but we know that when we have more uncertainty, bad for business, bad for households.
But MD, does this feel different? Because this is something over Greenland, so this touches sovereignty. In 2025, what held the economy together is that not many countries retaliated. Mm-hmm. This could be different.
Well, we shall see. I would not venture into speculations what is going to happen or not happen. What I would say is that it is very important that we recognize we are in a world of unthinkable happening. And in this world, I have one advice to people: stay calm, assess with no emotion where you might want to go.
How difficult is it to assess the impact on the economy if we do have these extra 10% tariffs on certain European countries? Who would lose?
We have run all kinds of simulations of what may happen. And what we do see in this simulation is that we deviate from keeping trade more or less on the right track. That could halt growth down. What I want to stress is that the best way forward, find a path to agreement. And that is going to be good for everybody everywhere.
I mean, there's, again, quite a lot of, I guess, concern on the ground as President Trump arrives here that they've already left 70 international institutions. Are you worried that they could eventually leave the IMF?
To be very frank, no. I think we are great institution for the members, 191 of them, including the United States. So let me give you two reasons why I'm not worried. Number one, we cost no money. We actually work like a savings account. The U.S. lends money through us. We pay back with interest. For the last 2 years, the U.S. got $3.1 billion in interest from the on-lending they do with us. Number two, we actually are strictly focused on the economy and on reforms. And that is great for everybody's business, including for the U.S. And there is no other institution, when there is fire, we come and we put it down. And when you look at the world today, Francine, do you know how many fires we are putting down?
Many.
50. We have 50 programs. And of course, our determination is to continue to serve the membership, to be good for business, to be good for households.
You mentioned a lot AI in your World Economic Outlook. How much AI investments are you expecting this year to help the global economy?
Well, what we are seeing is that the enthusiasm to invest in AI is rewarded by profitability so far. So what we expect is to see continuation of this flow of funding in AI at the cost of investing in many other worthy areas. We are not yet worried about frothing that may be like dot-com bubble, but we are cautioning people that they really need to follow very closely the productivity impact of investing in AI. So far, there have been gains, but will they be sustained? Remember, we were assessing the growth impact of the AI between 0.1%, 0.8%. That's a big difference. And therefore, the reward on investments is what we are a bit worried. Would it materialize with the scale and the speed that justifies this massive flow?
MD, I also want to ask about two countries specifically. One, Venezuela. What do you think will happen in Venezuela, especially what we've seen over the last 2 to 3 weeks with the removal of Maduro?
What is specific for our engagement with Venezuela is actually it is non-existent since 2019. Our membership did not recognize the authorities, and at this point has not yet moved towards recognizing them. Nonetheless, we have kept a watchful eye on Venezuela. All through this time, what we see is devastating. The economy shrunk dramatically. Inflation is on the rise. We worry about hyperinflation. 8 million people left the country. In proportion to the population, more than Ukrainians that run away from a war. So how you turn this around, given that there is really no credible data, this is going to be extremely difficult. We are ready. If the membership says, you're good to go, we will immediately step up engagement with Venezuela. And I can tell you, for the people of Venezuela, I just hope that there would be that kind of progress soon.
You've just come back from a trip to Ukraine. There's a lot of talk here that actually Ukraine is being forgotten, maybe at the margins because of everything else that's going on. Can you update us on your program there and whether you see the resolve from European leaders to actually do enough?
Let me first say that going to Ukraine was very sobering because this is the worst winter, minus 20 degrees Celsius. This weather here is paradise in comparison. The city is cold, dark, but functional. And that impressed me tremendously, that the streets are cleared so people can go to work, traffic lights work, and actually everybody I talked to shows tremendous strength. I went to visit a power plant that was bombed. How cruel could you be to deprive kids from a chance to go to school because there is no heat, there is no electricity. And in 14 hours, they restored it for 75% of their consumer access to power. So there is that incredible strength of the Ukrainian people. For us, it was demonstrably so throughout the first program. We had, as you know, 8 reviews, all completed successfully. Now we are putting forward a new program for Ukraine, very important anchor of macroeconomic and financial stability, so the 90 billion from the EU can flow into Ukraine. You're saying, is there a risk for Ukraine to be forgotten? I don't quite see this because in Europe there is a very clear understanding that Ukrainian security is European security.
So you're confident they'll get the money in good time?
I'm confident. We have to continue to move forward with the reforms that the country needs because Ukraine cannot be in between market economy and non-market economy. Move to markets.
Kristina Georgieva, she's the managing director of the International Monetary Fund. A recap of the TSX, which has another record close today, up 50 points from Friday, hitting 33,090 today, up 32% over the last year. Thanks for joining us today on The Close. We'll see you back here again tomorrow.